Hi everyone, this is Carlo from Forex. I'm just making this video to show you a couple of things about how to assess the synergy zone. I know and I remember that I sent you a canceled trade due to the situation of the 4-hour chart. Let me just bring in the 4-hour chart so you can understand what I'm saying. This is exactly the reason that I contact everybody and said that cancel the trade. They were closing in too much into the crossing stage, and by that time it could turn into like a very nasty situation or sideways channel consolidating market. So back in the 1-hour chart, it would steadily go into the south side. All right, so now what I wanted to show you in this video is the power of sustaining the zone and believing in the zone. If you notice, I got the 49.96 as a major low. Now, if you noticed, the uncomfortable situation is the range of movement on the market lately, meaning that the range of this zone is over 178. That's way too much, too steep to be participating in for any type of trader. And in this case, I got the pivot steps in place, and this one right here didn't give us any opportunity until perhaps later on, because this was a low close and this was a low close right here, so no confirmation. Market just then eventually almost reached the level of returning point. So first of all, I just want to show you how 46.96 is a major turnaround point, meaning that if prices go through that stage or this level, right, or this pricing right here, it means that perhaps the market's going to come back up and then eventually come back down. All right, but that never happens. It's important of sustaining your losses at that level first. Look how the market just turned around and that stop loss was never reached. Now check this out. I went long right here where you see the buy. Okay, so I placed a buy and the market gave me what, about 54 pips, way enough pips for me to capitalize, but I sustained that, and look, I had to sustain 113 pips against me in order for me to let the market or the trade plan goes. So our trade plan was to go long anywhere between the 48.72 and 46.96 and sustain that buy as soon as we have the pivot step in place, because the pivot step is the one that is giving us the right entry for the right moment. Now I'm only long half a contract here, just for the fact that I cannot personally sustain a $1,130 loss. All right, just too much for me in my personal situation. But I can certainly sustain, you know, 600 bucks of loss on this one, for the matter of explanation. So it makes sense. It makes sense for me that if I cannot sustain 100 pip move against me, because it's over $1,000, but I can sustain what, 500-600 bucks, then I just have to lower it to half of the contract. All right, so that's my situation. Now, if you notice, I got a trail stop going on, and it's working so far. And in this case, this is not the pivot step that triggers my entry. It was this one right here. So I use this pivot high, this pivot high. So just for the sake of explanation, I'm using this one and I'm using this too, those two. And here is exactly where the entry came about, right in this bar right there. All right, it's a close above it, and I just went long right there. Okay, so market gave me this much and then eventually collapsed against me. This is exactly where I suggest to people to actually um, cancel the trade, because it looks like they're taking this pivot low, and I'm not feeling comfortable with that scenario. All right, so the market surprisingly, once again, I just went ahead and let this trade go on just for the fact to show you how powerful the stop loss level is. The market just turned around and now it's heading back towards where we're expecting it to. All right, it's pretty far away for the actual target prices that I'm getting. Okay, it's way too far. That's absolutely a situation for me to consider. So I just triggered this exit at 49.78 just for the fact that it's a very highly calculated and also is an average level of support and resistance based on this previous top that they make here. All right, so but I just wanted to show you exactly how powerful this market is and how incredible is if you sustain the rules of the trade and believe that the system is working, you can certainly gonna end up having more profit than losses. You know, I tend to see a lot of people switch to the 5 minute and take a look at the 5 minute, keep looking at the 5 minute consistently, and that's what's going to happen is going to change your mind. If you change to a very objective way like this 1 hour, I went long here. The market came down. If they stop me out, they stop me out. This was my stop loss. Market just reversed, and now it's giving me positive returns. And that's it. I just wanted to show you how would that work, but you know it doesn't change anything. I will certainly consider and I sustain that at my point of view is to preserve your capital. That was the reason for canceling that trade because it was too erratic on the move, and the MACD on the 4 hour was certainly suggesting a possible change of trend. So anyway, I hope this video will help being very enlightening to you and help you understand how to actually work the system on the forecast based on the levels of stop loss, potential area of buy, and how do you have to work the area. Patience and consistency, I believe, is the key. Okay, so I hope you like this video. You got any questions, just let me know, and I can return a video response with it later on. This is Carlos Diaz from Forex Effects. Take care.